Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of LME 3-month nickel, zinc and tin.
LME 3-month nickel. 5 weeks ago, I lodged the idea of a large bump and run reversal pattern in both your own and my mind, with a huge primary topside idea up in the region of 31,200, well up off top of my daily chart. It's something to bear in mind, stick in the diary if you will, for some date in the future, but I also look closer at more nearby and I suppose realistic levels first. This led me to the early February, late March bullish Andrews pitchfork. This had been as good at showing the bullish angle of attack of the market. However, late 6 weeks ago, and then again the early 5 weeks ago, the market breached the upper tine, currently at 22,570. Now the breach was repaired, but by doing so, prices swung around 180 degrees and headed lower, pushing down through the lower tine 3 weeks ago, currently at 19,950, and 2 weeks ago, pushing down through the combination of the declining gold highlighted long moving average, currently at 17,790, and the medium moving average, currently at 18,090. In the process of moving lower, the market created a late May to date bright red highlighted bear channel on my daily chart, and that's currently at 15,355 to 17,250. I said last week, and I quote, this bear channel would dictate the market for the immediate future until it is broken or until the bear channel morphs into something else, end of quote. Last week, prices started slowing down on their approach to the June 2021 low at 17,095. This support did not look that strong, and I expect to see prices pushing down through and towards the next support, the May 2021 low at 16,610. This last support, the latter one, looked the most competent of all of them, as it ties in with the late March low and the entrance to the congestion further down, formed between November 2023 to February 2024 between 17,100 down to 15,845. Now, I even went as far as saying last week that, and I quote, an easy glance at this congestion and you can see it may not stack up against the overhang overhead formed since February, end of quote. Well, the June 2021 low has proved to be much more resilient than I imagined, as it continues to slow the market's approach and this week actively act as a support, enough that prices have started to exit it, the bright red bear channel. Now, before you start throwing away the bright red bear channel, there is something you should know. The V-top with a pipe top at its apex formed over May. This whole V-top action from even February to date may not just be a simple V-top, but a V-top with an extension. In these types of V-tops, after the peak, the market may start moving lower, but then form a hesitation or a congestion of sorts, usually a pennant or a bear flag type pattern on the way lower. Now this might be the case here, so I would suggest holding fire and writing off and retiring anything until the current move sideways on the June 21st low sorts itself out. It could after all just be a hiccup in the road low, and with this in mind, another factor is to be considered is that if we do see prices move down into the 17,100 to 15,845 zone, then the big pattern idea, the one of a descending scallop pattern morphing into a bump and run reversal with some large upside potentials, well, that pattern idea may be morphing further back into a descending scallop pattern, but with some significant bearish potentials. So watch this space. LME 3-month zinc. The mid-April to end of May purple highlighted ascending wedge pattern had driven this market higher up as far as the bright red coloured neckline extension, currently at 31.47 of the September to December 2022 reverse head and shoulders pattern, where it peaked with a horn top in late May. Now, this actually turned out to be a false break high as prices moved back down, rejected by the bright red neckline. Early 3 weeks ago, the market reached the primary target for the horn top, and by the middle of that week, it had dropped down to the harder to reach secondary target. Now, the decline continued, but it was hesitant when it went below the green highlighted short medium moving average, currently at 29.02, and especially when it reached down to the interesting support, currently at 27.82, of the broken upper tine of the old May to August 2023 bullish shift pitchfork. that had acted back then as an August 2023 to April 2024 upper bull channel line. It is highlighted in dark blue on my daily chart. I said 2 weeks ago, and I quote, "This is the first decent support we have seen, though I would not be surprised if prices do move further down near the middle time," currently at 26.14. That's between the medium moving average, currently 27.01, and the long moving average, currently 26.10. My reasoning for this was that since, and that's the end of the quote, my reasoning for this was that since May, this whole move down had formed a bear channel, which I've highlighted in pink on my daily chart. I said last week, and I quote, "This bear channel is running the market this time, and until it breaks or morphs into another pattern, it will continue to do so," end of quote. Well, late 2 weeks ago, prices broke out of this pink bear channel, or rather prices wandered out of the bear channel and stood around just like cattle that had broken out of a field and now look dumbfounded. In this process of standing around, the market has seemingly formed a small pennant formation over early to mid-June. I did not highlight this pattern, as to do so would just obscure the whole pattern itself. However, even last week I said the following, and I quote, "This is not to take away anything from the obvious strength of the dark blue upper tine come upper bull channel line, but we can look at the possible pennant as also a possible form of a halfway hesitation in a potentially much larger move lower. We will have to see how this possible pennant pattern develops as it runs out at the end of next week." So basically that's this week. And I carry on the quote, "And I'm sure I will have caused a move, or at least caused another change, another morphing into another pattern by then," end of quote. A morphing into another pattern is exactly what has happened, with the lead contender at the moment being a possible sideways triangle. But I will not take anything away from what is developing, and all patterns, past and current, should be maintained and expanded as they need to be, so that what ultimately comes out from this extension to the recent topping action in late May, so that what comes out develops correctly and that the opportunities presented are made absolutely clear. LME 3-month tin. 3 patterns formed here over April. A bull flag in the first half of April that reached its initial topside target, and a spike upwards in the middle of the month, followed by a possible hesitation in the second half of April that looked very much like a bear flag. It was a slim bear flag, though it had potential, but it failed to fulfill this potential. That was not all, as together these 2 congestions plus the central spike, they all made up a very narrow head and shoulders top pattern with a fairly flat neckline, highlighted in bright red, formed over April, and that's currently at 31,575. The potential below for such a pattern also failed. And as I said 5 weeks ago, and I quote, "It looks like the slim head and shoulders pattern formed over April is not a topping action, or possibly a continuation pattern, and maybe even morphing into something else," end of quote. Well, that morphing into something else was what happened, with prices reaching up as far as the middle time of the mid-March to late April bullish shift pitchfork that I drew 4 weeks ago. When it was trying up there over most of the month of May, it created a more rounded top than the one seen in April, such that we now have, or look like we have, an April to May double top, Adam and Eve type. It also killed off the bullish shift pitchfork, with prices 2 weeks ago breaking below the lower time. The move lower attempted to drop back down through the 50% Fibonacci line of the March 2020 to March 22 move at 31,845, as well as the bright red neckline, the rising green highlighted short medium moving average currently at 32,650, and the old December 2023, April 2024 upper bull channel line currently 32,725. However, all these supports together caused a reversion back up to the broken lower time at the start of 2 weeks ago. But by the middle of that week, the reversion had also failed, and prices dropped down to where we have been since early last week. Testing the supports, specifically the green short medium moving average. So where has this left us now? Well, with all this, we have still not completed the whole of the double top pattern, Adam and Eve type. We would still need to see a confirmed break below the July 2023 high at 30,205 to start even looking at potentials below. Additionally, I downgraded last week the late May to mid-June descending wedge pattern that I drew 3 weeks ago. I had doubts about this pattern last week and they proved justified. As a result of this, a new larger pattern emerged last week, a late April to date sideways triangle, highlighted in purple on my daily chart. And that's currently 31,495 to 34,450. This pattern is much like a double top, still not complete, having had only 2 touches per side. But it has potential, so I could see it working together with the double top idea, or maybe even not working with it and making something else. Either way, keep a close eye on the purple lower time, currently at 31,495, as it could also be seen as a neckline for the whole of the double top idea.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.